I just think that given the way silver's been going and the price and so on, people are really cluing in that this is an asset that has been dramatically undervalued, very much oversold for a long time. The gold silver ratio we talked about is a great indicator of that. So there's a lot of built-in value in silver. It's one of the cheapest assets, I believe, even still today at around $41, $42 that you can find anywhere. Here's what the interesting point is, Callie. If you add the investment into silver ETFs, and then you look at what your overall deficit will be for the year. You're at the third highest deficit in the last decade. So that would be 187 million ounces. I very much believe that to perhaps a little bit lesser extent, the ETFs, but people who are buying physical silver and people who are buying silver ETFs, especially in this kind of environment with what's going on with inflation and geopolitically instability and so on, I think that a lot of that silver is going to stay off the market. And so that's going to continue to add to tightness in the silver market, and that's going to help continue to push prices higher.
For disclosure purposes, our site does not make recommendations for purchases or sale of stocks, services, or products. Nothing on our site or this podcast should be construed as an offer or solicitation to buy or sell products or securities. All investing involves risk and possible losses. This podcast is for entertainment purposes only.
Peter, it's always great to have you on the show. Big day today for the markets. We're assuming the Fed cut is happening today. Do you want to just talk a little bit about the setup for silver? It feels probably like the best setup in the world for silver right now.
So thanks, Callie. Yes, and thanks for having me. So the Fed's going to pronounce itself in probably an hour or two from right now. And I think it's pretty widely expected that they're going to start cutting rates. So they're going to return to their rate cutting cycle, which they've paused since I believe it was either earlier this year or late last year. And the expected cut is a 25 basis points, so a quarter of a percent. That's what I'm expecting. I don't think they want to shock the markets or anything, and they've certainly been telegraphing that. And I think what we've been seeing in the precious metals prices and commodities as well is that expectation is that rates are going to be cut in the face of sustained high inflation. And I've been saying, going back several quarters, probably at least even a year, is that this was when we would probably see, big upside come in precious metals because really what it's telling us is that the Fed is between the proverbial rock and hard place. It's it sees that unemployment is rising, and so it's supposed to encourage that by cutting rates, and yet it sees that inflation's also rising. And so, it's got this dual mandate, but it's sacrificing inflation for employment. And so, sacrificing inflation means that they're willing to cut rates, even though to help fight against inflation, they should be at least leaving rates where they are, which technically should help. So they're caving. And so, because they're caving, in the face of high inflation suggests that they'll continue probably caving as well as we go on over the next several quarters and through the next year, probably cutting a full 100 basis points or more, maybe up to 150 basis points. And that's just fuel to the fire for precious metals. And I think that's what we've been seeing over the last sort of couple of months, especially as these expectations have gotten baked in. My personal opinion is that look, no one knows for sure, but I think a lot of this may have been priced in by now, and we may be experiencing the sort of what we call buy the rumor, sell the news. It wouldn't surprise me if we see some profit taking at this point in both the metals and then the miners. So that's kind of what I'm expecting to see play out. I think a lot of this has been priced in, and it's been so hot in the precious metals that it wouldn't surprise me that we get this, at the very least, sort of a consolidation phase over the next little while. And that would lead to very probably some fantastic opportunities in terms of buying or adding to exposure.
Can we talk about the silver to gold ratio that it is currently, and then some of the historicals and like what you're seeing short term, I guess, for the silver bugs out there?
Sure. So right now the silver gold silver ratio is around 87, 88. Um, yeah, closer to 87 right now. If you look back over the last, say, 20 years or so, it's probably averaged somewhere around 60, 65-ish. And that's what I'm expecting to see it eventually move back to. Uh, at 87, it's still very high. It's been higher. It was near an all-time high, I believe, at the COVID peak, which was in early 2020 when it went to about 125 to 1. In other words, it took 125 ounces of silver to buy one gold ounce. And then just recently, we were at this would have been around the middle of last year, we were at about 103, 104, and we've fallen from that point, drop of about 20 points from about, as I say, about 84, 104 to about 84. Or 85. We've risen a little bit since then. Um, what we've seen, though, besides the fact that the average, say, the last 20 years is closer to about 65-ish, is that historically, if you look far back enough, whenever the ratio, let's say, reaches above 80 and peaks and starts to come back down from 80, and especially once it crosses below 80 and continues to fall, that's like a starter's pistol for silver in particular. Now, it's interesting to note that both metals actually tend to do well when we see the gold silver ratio come down. It's just that silver does better. So silver moves higher faster than gold does. It doesn't have to be that way, but typically that's what happens. So it's very bullish for silver, gold as well, but especially silver at this point.
Beaver Creek is, probably one of the biggest conferences that everyone looks forward to and kind of gives the sentiment for the end of the year. And Frank Justra made a big comment that paper gold is over. Do you want to give some commentary or expand on that? Because I feel like that's a big statement to come into the end of the year with.
I don't disagree with him, frankly. I think that he's right. You know, for a few reasons. One is that there has been, and there I think will continue to be talk of manipulation unless it technically ends and everyone agrees that it ends and has ended at some point. Um, Silver, to a fair degree, of course, is in that same boat. And my view is that the manipulation happens in the short term. I was actually discussing this with David Morgan not too long ago, and he explained his point of view, and I completely agree with it, that the manipulation happens in the short term, but it can't be sort of sustained. And so despite the sort of short-term manipulation, it can't override this sort of longer term upward trend in the silver price, gold price as well. And so, I mean, and the best example I have is that, and although it has been admittedly a long time, but still, silver was about $1, I think 35 or something in 1971, and it went all the way to $50 across that decade. And then silver was $4 in, I think it was 2001, and went to $49 in 2011. So that took a decade. Despite manipulation, you're going to get this move upward, and I think that's going to continue. And to Frank Justra's point, I think some of the things that we can point to are the fact that a lot of the pricing, more and more of the pricing is taking place in the East. You've got large centers in the Middle East, in Asia, that obviously trade a lot of precious metals and whose exchanges are becoming more and more important. And the Shanghai Exchange, for example, is a physically backed contract that participants are taking a lot of delivery on. And so, in a sense, it's more meaningful than Western exchanges because people are going there to actually take delivery of the metal. So, I think we have to look at the pricing that takes place there, and becoming increasingly big buyers of both metals. So yeah, I mean, I agree with Frank, and I think, that's a big statement, but I do believe he's right, and I do believe that we're going to see that play out and prove itself out to be a fact over the next few years.
So do you think this will be a trend that's going to follow into 2026, that the de-dollarization and the East might feel a little more important than over here?
Well, definitely. A couple of interesting points to make. One is that if you look, there was some statistic that just came out. I think it was actually Tavi Costa of Crescat Capital who put this chart out. Great guy. I'm glad to call him a friend because he's such a smart guy, and he puts out such great macro info. And his chart was plotted central bank holdings of US dollars versus gold. And for the first time, unless you look back, say, 50 years or so, for the first time in sort of recent history, the value of the gold held by central banks has actually surpassed the value of treasuries. So that's very meaningful. And if you look at surveys of central banks, they're all saying we have all very much intention of continuing to keep buying. So that certainly is not changing. And we know a lot of the East is interested in getting rid of dollars. You've got these all this talk about BRICS currencies. To what extent that ends up sort of playing out is one thing, but we know that in the East they're selling off their treasuries. They're not buying as many treasuries, and so I certainly expect that trend to continue. So, and then the other thing, so that's gold. But if we talk about silver. It's very interesting to note that Russia, about a year ago, was public about the fact that for their national reserves with their central bank, they were going to start buying silver. They were the first ones to say this publicly, and then we found out a little while ago, maybe a month or two ago, that Saudi Arabia had now purchased shares in SLV, and I believe one of the silver mining ETFs. And so it was not huge amounts, but it's what they were willing to say, and is that the fact that they're taking a step, and I'm sure it's minute for the kind of investment funds that they have, and the funds that their central bank has under management. But it's the fact that they're doing it, and that you can very likely, I think, fairly assume that what they're saying publicly is perhaps a portion of what they're doing, and what they're saying publicly, probably there are multiple others who are doing the same thing without actually, revealing it. So it's very meaningful in my view, and I think that we're going to see that continue to happen. And I think a lot of that has to do with, well, one, of course, silver's historical role as money, but also it's increasing, um, different players, industrially and otherwise, starting to see silver as increasingly critical, and its role in electronics, industrially generally, things like solar panels, especially. You and I have talked about this a lot in the past, is sort of undeniable, frankly, and with the importance of solar, and there's been some pushback on solar, people saying, well, we think that China's going to install less this year, that there's been a ramp up at the beginning of the year because they had these tax credits or subsidies from the government that are running out, and so there's been sort of this, they've been front running it and trying to get a bunch of solar panels produced and installed before this runs out. But I think one of the game changers that people are missing is the role of batteries. And I don't remember the stats exactly, but I was looking at them just again recently. It's sort of lighting a new fire, so to speak, under solar, the way I see it, because the downside of solar is, of course, nighttime. You can't produce at night. But and so it's not what we call baseload energy, kind of like nuclear or coal or whatever, because it's variable. But batteries can do away with that completely. So you can produce during the day, produce more than you need, store it, and then tap into the storage from the batteries at nighttime, and you can that way get it continuous throughout the day and make it a base load power. So batteries are becoming a real game changer for solar. And one last point on that is that I was looking at some stats as well on how solar is being adopted by a lot of these data centers and AI requirements for energy. And the data centers are very, very heavily turning towards solar. There's been some talk about nuclear, but that's, I think, for the really, really, really big boys that have, billions of dollars to tap into perhaps some unused nuclear power. But nuclear takes like 15 years to turn around. You have to uh, design, approve, build, and then get this thing running. As opposed to solar that can turn around in like a tenth of that, we're talking about a year and a half. So it's obvious, and that's what I had said, and I got pushback on that about a year ago. And I said, no, I don't think so. I said, I think that because you can be completely independent, you're technically off the grid, you can have your own grid. If you're at one of these data centers and you have the room for it, you can actually build your solar farm right on site, tap into your energy. And now, again, we've seen that the batteries have made that, again, that much more attractive for the data centers because they can, they obviously need baseload power, and they can have that with batteries and be totally independent. So, that again bodes, I think, very, very well for the demand for silver as we go forward, given what I think is going to happen with continuous demand for solar.
I think solar is one of the most applicable, actually real-time renewable energies that we have comparatively to some of them sound great, but are quite a few years away from actually being
Exactly.
ready to go. Is there any other updates or commentary that you want to give on the demand side for industrial on silver, or is there anything from Silver Institute?
There is something that I find really interesting, and that is the Institute, their forecast shows that they expect, well, here's a couple of things. So the broad strokes are that we are going to be in the fifth year of a deficit this year. And if you add the deficits of the last 5 years together, including this year, you're at an entire year's mine supply, so about 800 million ounces. What's interesting is that they think that the deficit will actually be less than last year. So they're forecasting about 117 million ounces versus last year's 149 million ounces of deficit. And yet still in this year's World Silver Survey, they said that they expect these deficits to be ongoing for the next 5 years, and that we would actually very likely hit new record deficits at some point in the next 5 years. So that's sort of one aspect of it. The other thing I think that's worth looking at, and that's very interesting, is that when they publish their numbers, they have total supply, and total demand. And within total demand, they have demand for physical coins and bars. And they actually expect that to rise somewhat this year from about 190 million ounces demand to 204 million ounces. I think we're going to see that number ultimately be higher, but so that's still pretty significant. We're talking about 20% of all demand going to physical coins and bars. What's interesting to me, though, is if you look at what they show separately is investment into silver ETFs, physically backed silver ETFs. And they see that having switched from 2 years ago, silver flowing out, about 38 million ounces flowing out, to a 100-ounce swing to 60 million ounces flowing in last year, and then a growth this year to about 70 million ounces flowing into silver ETFs. So that's about a 14% increase over last year, they expect, of the amount of silver that's going to flow into silver ETFs. So what I find, I'll put it this way, what I disagree with is that when I've asked why they show the amount of silver that flows into silver ETFs separately from the supply demand, the base supply demand numbers, is that they say, well, the silver that flows into ETFs is technically still available. It hasn't been consumed, and that silver, if people sell their silver ETFs, that silver will flow back into the market and make it available again. Well, that's also true for physically purchased silver coins and silver bars. that's not consumed. I mean, some of it maybe, but mostly it's not. And that can easily come back to the market as well. So I'm not clear on why one should be excluded and the other shouldn't be excluded. Um, and I also think that yes, it's probably true that ETFs are sort of easier to sell, and someone can just kind of go into their brokerage account and hit sell, and that will help that silver flow back to the market and help supply. But I just think that given the way silver's been going and the price and so on, that people are really cluing in that this is an asset that has been dramatically undervalued, uh, very, very much oversold for a long time. The gold silver ratio we talked about is a great indicator of that. So there's a lot of built-in value in silver. It's one of the cheapest assets, I believe, even still today at around $41, $42 that you can find anywhere. If you add, here's what the interesting point is, Callie. If you add the investment into silver ETFs, and then you look at what your overall deficit will be for the year, you're at the third highest deficit in the last decade. So that would be 187 million ounces. I very much believe that to perhaps a little bit lesser extent the ETFs, but people who are buying physical silver and people who are buying silver ETFs, especially in this kind of environment with what's going on with inflation and geopolitically instability and so on, I think that a lot of that silver is going to stay off the market. And so that's going to continue to add to tightness in the silver market, and that's going to help continue to push prices higher. So that those are my 2 cents on what's going on on the numbers in the silver supply demand aspect of things.
With silver around 42, great time for a lot of these juniors and mid tiers for raising capital. What are you seeing out there as far as the financings are going? Are they closing at rapid pace? Do you think this is going to continue like into the end of the year for all these juniors in the silver space?
If we get a pullback, which I think would be good, healthy in the silver price, we could, we will very, very likely get it in the miners as well. And that doesn't worry me. It doesn't scare me. I think it'll just lead to some good buying opportunities. And once they have bottomed, that's going to be a fantastic time to sort of jump in, in a more meaningful way. And I think the market will continue to stay very healthy and very strong. The financings have been off the charts. You have a great point, which is that the financings are not only closing. I mean, sometimes I hear about things, and then uh, I'm shocked, but I shouldn't be that we're hearing about some of these financings, and I'm hearing about some people are saying, well, did you hear about this? Do you know if there's room, whatever? And I'll find out, I'll ask, and then the company will tell me, oh, that we opened that financing yesterday, it was closed at the end of the day. And it was oversubscribed. Sometimes some of these things are oversubscribed 2 and 3 times, so they could raise 2 or 3 times the money that they had intended to raise originally. Um, then they'll turn around, and of course if it's reasonable, they'll take more than they had originally planned. So they'll upsize the financing. Sometimes it's 20%, 30%. And then on top of it, there is an over allotment that's available to the broker that's helping them to raise the money, and those get completely exercised as well. So you could go from, let's say you're raising 10 million, you could easily be at 15 million by the time this closes, and it could take a matter of a couple of days. So it's been very, very hot. There's no question about it. I think that's going to continue, and it's not completely surprising, frankly. Silver has almost doubled from the end of February last year. It was, I think, $22. We've been to 42, 43 in the last few days. So on that basis, not surprising at all. And I think that it would be unreasonable to be surprised that these juniors are taking advantage and raising money. And frankly, at 40-ish dollars, let's say in silver, even honestly at 30, high 30s, 35, 37, $38, they can make some really, really good money mining silver. And so that makes them that much more attractive, makes the juniors attractive to the developers and the seniors, and it makes producing more attractive to the producers. They look for ways that they can expand production. They're more willing to spend money on exploration, especially brownfields that's near existing infrastructure, so they could bring that into production sooner. So yeah, I mean the financings are there. They're hot. I think they will continue. I'm hearing about a few private deals that are supposed to go public over the next sort of month or two, and I can think of probably three or four that are in the pipeline. So we're going to hear more about this, and it's just going to it's a small space. It's going to remain, I believe, small. Silver is quite niche, and that's what, in my view, makes it attractive.
How valuable or quality, I guess, of finding a company now if they're close to that production, as we've just laid out a map that the demand for silver is obviously not going away. That if you can find a junior that's close to production, like what's, I guess, the great setup for that at the current moment?
So yeah, I mean, that's a good point. That's something that's frankly not typical of juniors to be close to production. Most of them are, in the business of, and it's understandable, but most of them are in the business of issuing shares to raise money and inevitably dilute existing shareholders. It's all fine when, you're in a really good market and the silver price keeps going up and everybody forgets about that, in a matter of days or weeks because that raise is an afterthought and the dilution's an afterthought, and the price is quickly higher than the small dip it took after the raise was announced. But we will have periods where we get back to reality, and that business model weighs on people, and maybe the silver price stagnates for a little while. So a junior that is set up to be able to produce and to bring some serious cash flow is very attractive. And there are very few like that. One that I like is ES Gold. They interestingly just about 2 weeks ago announced that they had updated their PEA on their Montauban project, which is in Quebec. And it's tremendous. I mean, the after-tax IRR on this thing is 60%. The payback period is less than 2 years, and the pre-tax value of the project is $44 million. The pre-tax IRR is 105%. So this thing pre-tax will pay itself back completely in less than 2 years. So and so they are probably a matter of a few months away from production. So that's going to be tremendous for them. By the way, the price that they assumed in this revised PEA was where they had revised the prices of the underlying commodities. So this is with a revised price of gold to 2,900, we're at 36, and a revised silver price to 31, and we're at 41. So that means that these numbers are actually still low in this revised PEA, and that the IRR technically at current prices are a lot higher. So it's very, very compelling. They've been pretty aggressive in the sense that they've raised some money. They are now spending on doing exploration besides, building the plant that's going to process these tailings and start flowing a lot of cash to the company. They've also announced that they're acquiring a project in Colombia that is going to be sort of a sister project to what they're doing in Quebec, processing tailings, which is fantastic actually for not only them and shareholders, but it's fantastic for the environment, for the community, because they're basically doing a cleanup process. And so they're going to copycat this, carbon copy it, I should say, in Colombia. And they've made that announcement, and it's something that they can duplicate on and on in all kinds of places across Canada and elsewhere. So I see, this is very compelling, a lot of growth, and because of their pending, their near-term cash flow, they will not need to have to go back to market for, I think, quite some time. Because of the cash coming in that will feed all these different avenues they have to expand.
Do you think now, again, with silver prices the way they are and the market's conditions obviously favoring commodities, that we'll see more back in Latin America, like Colombia, Peru, and places where we kind of felt stalled a little bit for a while?
I do. Yeah, absolutely. That's a good point. I think that people will start to have to look a little more widely, rather than sort of, North America, Australia, and frankly, if you think about where you find silver, there aren't all that many places. And so you're right. The sort of Western, if you look at a map and sort of the Western uh, side of North America and then South America is where most of the gold is, sorry, the most of the silver is. And so that's why I think people have to look more towards places like Colombia, Bolivia, which, by the way, is in the middle of an election, and it's looking actually favorable that they may be leaning favorable for mining, that they may be leaning more to the right. And one of the companies I know of that is actually looking to go public soon is a Bolivian explorer, has some very interesting projects. And so I've become more favorable. In fact, I have been for a couple of years, but the way I've seen things play out, I think that if it continues to lean right and that works out to be the case in Bolivia, then that will be a new sort of untapped, mostly untapped jurisdiction that will probably have get a lot more attention. So yeah, I mean, as I say, Colombia, Bolivia, Chile, Argentina has really turned around. There are two plays there, Abra Silver and Argenta, both of which have tremendous silver projects. And now, because of all the changes that the new president Milei has brought in, are looking a lot more attractive. And so, yes, we're going to start looking south, I believe, for silver, and we're going to find a lot more of it.
Well, Peter, it's always such a pleasure having you on the show. For anyone that's possibly new who doesn't know who you are, do you want to just quickly mention your newsletter and then where they can find your book as well? Because I feel like your book is a must-have for this year.
Thanks, Callie. Yes. So my newsletter is Silver Stock Investor. You can go to silverstockinvestor.com, and you'll find out more about it there. And then my book is The Great Silver Bull, which you can buy on Amazon, and you have that available in print or in Kindle. And so I'm active on Twitter. Just look for Peter Krauth. I'm active on LinkedIn. You can connect with me there. And yeah, I mean, here's what I would maybe leave people with is that silver is a small market. Silver is very much in a tight undersupplied market. It's kind of a perfect storm for this metal, and it will be, by all indications, it will be for the next, I would say, at least 5 to 10 years, probably possibly longer. So it being a small market means it's also more volatile. But I don't see the volatility as a reason to stay away from it. In fact, I see it as a reason to be attracted to it. And that by that I mean that there's something for everyone. You know, you can be the most conservative investor but silver has a place for you. And that could be just owning some physical silver. And if you have a much higher risk tolerance, then you can go towards the silver juniors that are exploring for silver and get a lot more alpha, with your investments. More risk, of course, but you can weigh that in different ways. You can counterbalance it by perhaps having more cash or having more physical silver, buying in tranches when you buy into these small juniors, and take profits when they double, which is something that, we've managed to do actually just in the past week in two companies, and these were big companies. We took profits in two companies that doubled just in the past. Well, I'm not saying they doubled in the past week, but we took profits in the past week. One of them doubled in a matter of months, and one of them doubled over the last 2 years. These are larger silver producers. So it's a very, very healthy environment for this metal, and it will continue to be strong, in my view, for quite some time.